Hey everyone, Steve here from 11ish, channel where we talk about lucrative investment strategies and opportunities based on the requests from the 11ish collective. Since we've been going through quite a bit of turmoil and volatility in the stock market, a lot of you have been asking me for more fundamentally sound investment strategies, long-term investment strategies. And in this video, we're going to talk about exactly that. So if this is the type of content you've been looking for, please spank that like button and let's get started. So when I am looking for a long-term investment strategy, I am looking for a stock that I like to invest for at least 1 year. And there are 3 key indicators that I'm looking for. One is market ownership. How much of the market do they control compared to the nearest competitor? Second one is leadership, like the CEO, for example, or the board. Do they have a history of kicking ass? And lastly, the macroeconomics. For the next 1 to 2 years, what is my perception of how the world economics will affect all of the companies, and therefore the type of stocks I choose will be reflective of that fact. The first gem I found is eBay. They have a $37 billion market cap and have made $11 billion in 2019, but their PE ratio is only 8. That to me means that people are skeptical about how eBay is going to move forward, even though I think that they have a very strong footing and a very mature company that makes a shit ton of money. I think this is a good sign for a long-term growth strategy. The interesting thing to me about eBay is that they're not really a competitor against Amazon and Walmart. You think that they're all e-commerce and they're all basically tackling the same space now because they sell a lot of these open market stuff. But really, eBay's position, in my opinion, is more against Craigslist or against Etsy, because their bread and butter is more about specialized treasures that is not mass produced anymore, right? Stuff that you can't really get anymore. You can get from Craigslist, Etsy, or eBay. And what I can glean from this space is that Etsy, for example, their PE ratio is 10 times higher than eBay. And yet eBay is making way more money, right? So my hypothesis is that eBay, if they can figure out how to be more effective in how to capture the market and how to optimize their products and their position, I think their PE ratio should be closer to around 30, 40. And if that happens, your stock value is going to blow up and we're all going to make a lot of money here. My second rationale is that their leadership has just changed. They swapped out 2 board members and they have this new direction of improving their underlying technology. The eBay chair says publicly that they are to add significant experience and expertise at a critical time to support a technology-led reimagination of eBay, which to me means that they're probably going to update their underlying technology so that they're more machine learning driven like all of the other e-commerce businesses are, and also probably improve the user experience even further. Now, I think this idea usually is going to go either really good or really poorly, but the strategy itself makes sense for a mature company. And especially with an update in their leadership, I think this is the right direction for the company. And lastly, because of the macroeconomics of the lockdown and the COVID situation, most e-commerce businesses are booming right now. And so because their earnings are coming up soon in October, this is another reason why I'm investing in eBay right now. My second suggestion to you is Lockheed Martin. Now, I've been alluding to it for a couple of times now. And if you're looking for a more in-depth stock analysis, please check out my past video. I'll link it below. But ultimately, Lockheed Martin has been making a shit ton of money since the 1970s. They've been working hand in hand with the US DoD, and there's just 0 ways for a company like this to not make a lot of money. My hypothesis was that COVID will not affect military contract companies, and you can see in the Lockheed news, they're still consistently landing deals. And I believe this is also because we've reached this stage in history where a lot of underlying technology, especially military technology, they need to be updated. And you see a lot of companies that does military innovations, they're getting a lot of new contracts. And so this is another reason why I think the macroeconomics makes a lot of sense as well. In terms of leadership, as I said, this company has been around since the 1970s and they make billions and billions of dollars every single year. I think their leadership is a bulletproof train. And this makes me want to invest in the stock, frankly, forever. I wish I invested in the stock a long time ago. Now that we're basically getting into a Cold War against Russia and China, I think this stock is a very, very healthy bet. My third pick is gold. And you're like, what the fuck, Steve? That is not a business. Well, if life is giving you lemons for 6 months, you might as well start making margaritas, right? With all jokes aside, I mean, the other way to look at gold is that it protects you against inflation, and you do have a leadership that is telling you this is the right investment, and that is Warren Buffett. Warren Buffett has put $500 million in gold. That is worth thinking about. He is the leadership I look to for long-term investment opportunities, and short of natural disasters that just completely fajita plan, like COVID against the airlines, for example, he has a very solid track record. If you've been following me since the beginning, you know that I already have a lot of money in gold and silver already. But because Warren Buffett had made this giant play in gold, I think that it makes sense for me to shift some of my investments into gold as well, follow his leadership. In the coming weeks, there will be 2 additional stocks that I'll be talking about. One of them is an incoming IPO. I'm super excited about these 2 opportunities, and if you find my content helpful, please share it out so that we can grow the 11ish Collective together. Stay tuned so that you can get more content like this. Thanks for watching, and I look forward to working with you next time. As we grow the 11ish Collective, we'll be able to get more crowdsourced insights. We'll get this edge on all of the investments we talk about so that we're more confident about the stocks we invest in and with the stocks that we want to avoid. For example, one of our subscribers provided this detail on Sea Limited, a really, really great insight from someone who's actually in Southeast Asia. This is the type of content I'm talking about. This is the type of benefit, the community that I want to build so that we can all help each other out in a positive way.